Well, for more on Groupon, we are joined by Andrew Zalasin. He's the CFO at venture capital firm RRE Ventures, which is, of course, a technology venture capital firm. So, Andrew, I mean, Chris was just outlining $25 billion. Are we getting into the nosebleed section here?
Well, I think with Groupon, you have a company that actually started a market, has really capitalized and dominated this market. A company that has grown by 100% in the last 3 months since we last spoke about it.
It's amazing. And in fact, we kind of have this chart here that compares where it was in December to where it is now. And, you know, back in December, we had a valuation there of $3 billion, which people thought, God, that's pretty crazy, right? Google was bidding for it, 35 million users. Now you come on board this time around, 75 million users, $25 billion valuation, and a potential IPO. Is there any business model that justifies this kind of growth?
Well, clearly there is a business model. The company is profitable. They have billions of dollars in revenue. And if you look at the numbers, it's not just 100% growth in 3 months. But look at the sheer numbers behind that. 35 million, 45 million new subscribers in just 3 months.
Right. So how do they do that, though?
Well, there are a couple of factors. One is that people who go and sign up for Groupon and use Groupon usually have a very good experience. I mean, the basic premise is that somebody goes and has a great deal. So they think it's fantastic and they have a long-term relationship that's being built there, and they tell their friends about it, either up front so that there are enough people who buy into the Groupon offering,
right, or
later on and say, well, I had a great experience with Groupon, you should sign up for it. One of the other factors is clearly what happened with Google making a bid for Groupon, and there are many, many people who have come and said, I've never heard of Groupon, and they've signed up for it as well.
Right, the public profile just increased. But the question I always have with these coupon websites is how sticky the users are. I mean, they might try one, but do they stick around?
Well, again, the first experience is the most important one. And the first experience is likely to be a good one because somebody comes in and they get a very, very good deal. And they often bring their friends in with them to experience the offer. A lot of these are services as opposed to goods.
Right.
So it's a group sort of dynamic where people are having a very good experience and sharing it with their friends. So you have an opportunity to build a long-term relationship.
Now, is there any sense, and you know, I was thinking about this as I was reading through the story earlier, is there any sense that perhaps they're going to the public market because their valuations are just getting so high that it would actually be difficult for them to get private funding now?
Well, they just did get some private funding at a fairly lofty valuation. They brought in, almost $1 billion at that point. But they see an opportunity to go to the public markets and take advantage of what's happening out there. You see things like JP Morgan starting a social network, social media fund,
right,
and you see Goldman with Facebook and putting money into those companies. There's a lot of demand out there for these kinds of companies. They are a first mover. They are a dominant player, and they're going to take advantage of that opportunity.
So get out ahead first then.
Absolutely.
Andrew, thank you.